Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Overseas Land and Investment Limited, latest report. China Overseas Land and Investment Limited offers a diverse range of businesses and services across various sectors. At its core, the company engages in property development and commercial property operations in China and the UK. This includes rental properties, material procurement, supply chain management, and construction consultancy. In addition to these core activities, the company provides loan financing and security investment services, operates hotels, and develops and sells properties. It also offers a range of urban services, including office buildings, flexible working space, shopping malls, and star-rated hotels. Furthermore, China Overseas Land and Investment Limited engages in land consolidation, regional planning, real estate development, engineering construction, industrial import, and property management. The company's investment and financing arm provides guaranteed notes, while its consultancy services include property consultancy, real estate agency, and architectural design and construction. Its material procurement and supply chain management activities enable it to offer a comprehensive range of services to clients. Overall, China Overseas Land and Investment Limited is a multifaceted business with a broad portfolio of services catering to various needs in the property development and commercial sectors. China Overseas Land and Investment Limited market capitalization of $126 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that China Overseas Land and Investment Limited holds a significant advantage in their industry. China Overseas Land and Investment Limited trades at a lower price-to-earnings ratio of 8 times and a lower price-to-book ratio of 0.29 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.76%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline in a given market can be attributed to several key factors. On the positive side, revenue growth is largely driven by an increase in contracted property sales, which saw a significant rise of 19.2% from the previous year. Additionally, revenue from commercial properties also contributed to this growth, with a notable figure of RMB 7.2 billion. Furthermore, the company's expansion into new commercial properties has been a major driver of revenue growth, with an increase in total gross floor area, GFA, by 280,000 square meters. The provision of commercial asset management and material procurement and supply chain management services also played a crucial role in driving revenue upwards. On the other hand, revenue decline can be attributed to several factors. One major contributor is the downward trend in the property market, which has had a negative impact on sales. Additionally, the other businesses segment saw a significant decline of 56.6% from 2023 to 2024. This decline was also evident in specific regions and cities, with some areas experiencing varying degrees of decline or no comparable data provided. It is worth noting that while the northern region saw a growth of 27.7%, other regions had differing levels of decline or lack of comparable data. Overall, these factors highlight the importance of understanding regional market trends and adapting business strategies accordingly to mitigate revenue decline and capitalize on growth opportunities. opportunities. In recent years, our company has experienced significant fluctuations in its financial performance. One notable change is the increase in net income, which rose by RMB 0.69 billion, 26.6%, to RMB 12.69 billion in 2025 compared to the previous year. This substantial growth indicates a strong revenue stream and effective management of expenses. However, this positive trend is somewhat offset by a decline in gross profit margin. Despite maintaining a respectable level of 15.5% in 2025, it represents a decrease of 0.1% from the previous year. This slight dip may be attributed to various factors such as increased competition, rising production costs, or changes in market demand. The operating profit margin also saw an improvement, reaching 12.3% in 2025. Although there is no data available for comparison with the previous year, this increase suggests that our company has become more efficient in managing its operational expenses and optimizing its business processes. Overall, while net income has increased significantly, the decline in gross profit margin warrants careful attention to ensure sustained profitability. The company's financial performance is a testament to its ability to generate positive operating cash flow. On page 1 of the summary, it is stated that the company has an operating net cash inflow of RMB 16.73 billion, which is a significant indicator of its financial health. A closer look at the numbers on page 20 reveals more details about the company's cash flow performance. The total operating cash collection stands at RMB 185.61 billion, while the total capital expenditure payments amount to RMB 146.49 billion. This means that the company has successfully collected a substantial amount of cash from its operations and has used it to fund its investments. The net result is an operating net cash inflow of RMB 16.73 billion, which is a clear indication that the company is generating positive operating cash flow. This is a crucial aspect of any business's financial performance, as it shows that the company is able to generate sufficient cash from its operations to meet its obligations and invest in growth opportunities. The company's debt level has remained unchanged, but there have been significant changes in its interest expenses and average borrowing costs. Notably, the total interest expenses and interest expenses before capitalization have both decreased by RMB 0.04 billion. This reduction is a positive trend for the company, indicating that it is managing its financial obligations effectively. Furthermore, the average borrowing cost has also decreased to 2.8%, which suggests that the company is securing loans at more favorable rates. Overall, these changes indicate a decrease in the company's financial burden and improved management of its debt. The company's performance can be summarized as follows. In terms of property development, the segment showed a strong performance, indicating a successful year for this aspect of the business. Commercial property operations also demonstrated excellent results, with significant revenue generated from this sector. On the other hand, other businesses struggled to meet expectations, resulting in underwhelming segment results. The company's financial activities have been documented in various reports. One notable aspect is its dividend payments. The records show that the company has paid dividends on multiple occasions, as mentioned in several pages of the extracted summaries. This indicates a consistent commitment to returning value to its shareholders through regular dividend distributions. However, there is no information available regarding share buybacks. Despite reviewing all relevant pages, no mention was made of the company purchasing back its own shares. As such, it can be concluded that the primary method of shareholder return has been through dividend payments rather than share repurchases. That concludes the financial summary for China Overseas Land and Investment Limited. Feel free to comment below, and I will be happy to answer them when possible.